All right, let's get this going. Um, Thanks, everybody. Thanks for watching another live stream. Hey, Megalo, good to see you here. I know it's been a few weeks, and it's been kind of difficult to get these going with the signal engine stuff and trading and like being out of town for long weekends. But this is a good topic, and I think it's important to go over the idea of this because there's not like a user's manual for the blueprint, and it's continued to evolve from just this kind of like really informal document to something that a lot of people use and follow. So we're gonna talk about like a number of little things today. And so I made a couple of quick notes here. I'm not much of a note guy. Like I used to do developer evangelist work as a software engineer, and I used to do these speeches. I would give like speeches to huge groups of people, and I never used note cards. I was always like, forget it. Like if I don't know it, if it's not in my head, then I'm gonna get torn to pieces by everybody anyway. So this is the extent of it. It's just these quick notes. So what we'll start with is this idea of the philosophy. Like there's a philosophy behind the blueprint, and when I was kind of setting things together, putting things together for the Patreon, they were in these, there's like this tiered system set up, right? And so you can be in the Patreon for people that watch this that aren't Patreon members. You can be a free member, you can be an essentials member, a premier member, or a magnate member. And the essentials tier, the whole kind of point of that tier is that you get the blueprint. And the blueprint is like this research that I do on the weekend, and it's kind of like this, you know, this collated bit of data and knowledge that goes into that, comes out of that research and goes into this document so that people can like follow this during the course of the week. And so for essentials members, this is like the piece, like that's what you get, right? And then premier members get like the live trading and the signal engine and all these other things. But the point is that initially the blueprint was set up for that. Now, it turns out, I know there's some history here for some people. If you don't want to listen to this, and just fast forward a minute, uh, assuming you're not watching the live stream, right? Because most people watch this after the live stream. So what happened is as the Patreon grew, I noticed that most people don't want just essentials. Like most people want the live trading. So like 95% of the paid members on the Patreon skipped essentials and went straight to the premier tier of Patreon. And so what that means now is that actually a lot of people are using this, but the idea is that, even though it's a static document for the week, people want to be able to look into things, right? They want to be able to look at real-time stuff because that's what that premier membership is. And so that's kind of this idea here, behind what the blueprint is. And so then there's this statement, this time versus completeness, right? Because the goal is to get some of this stuff out there, right? And I was talking to one of the members and telling them, hey, like part of it is, well, and there was a situation that happened, which we'll talk about in a minute. And so I was telling these members, hey, the thing is that these trades, they don't, like, if I try to be really complete about it, and I try to be like, well, so for those of you that want to do calls versus puts, and those of you that want to do straddles or strangles or condors or butterflies or some type of spread, credit or debit spread, it just like blows up into this huge thing. And so I had to find a way to like have a nice blend of time versus completeness. And I mentioned this traveling salesman problem. In computer science, there's this idea that if you have a salesman and he's traveling door to door, and he has like thousands of houses to visit, what's the optimal path? What's the most optimal path for him to take to visit all of those houses? And it's a real academic problem. There's not like really a solution to it. without, you know, taking up outrageous amounts of compute power and CPU usage and memory and stuff. And so it's how do you be smart about it? And so that's kind of where I went with the blueprint, is like, well, how do I do this, right? And so that kind of goes into the next piece here. And this is a little bit of a tangent from the blueprint itself. But I have this idea. Now, this equation, it's not it's a legitimate equation, but it's not like real. It's not like you could go out and, you know, study this equation. I just kind of like wrote it down. And so the idea here is that we're looking, it's kind of a differential equation, and that u is a mu, like the Greek letter mu, right? Like mu dt equals sigma dp times r. And so mu here is kind of your growth, right? If you try to break down what growth looks like in your trading on the market, growth here over time in the price of what you're trading, right? Market price, market movement, which is stochastic, right? It's random, times some risk level, right? And so the change here, the price change just happens. It's totally external. But the risk tolerance that's up to you. Like that's something that each one of us has to decide. Like we have to all say, like, what is our risk level, right? And so when we bring that back to the blueprint, and just for people, because some people here probably aren't members at all, right? So these are what these trades look like. You've got, I do these setups, right? This week's setups. And so for the week that this all came up, Oscar was on the list, and there's an analysis, and, you know, you see here, there's these strike prices, and then here's Palo Alto. And I provided these strike prices here, and I give this a little analysis, and I'm like, hey, this and that, and this is the thesis and the strategy, and like blah, 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 hand waving, and then do this. And so these are kind of what these look like. And so then last week I went in, you know, earlier for the one that came out recently, the scorecard came out, and Palo Alto was considered a win because it went up, and all of the strike prices I mentioned were finished, expired, worthless, right? And so as we kind of look back at that, oh, you know what? It just occurred to me. I wasn't even showing that to you. I see it's so, I don't use this enough. I don't use OBS enough. So let's go back and try that again. Everybody's probably going to be watching this and be like, what in the hell is he even talking about? Okay, so these are the blueprints. Once again, I'll keep it quick. This is the setup. I provide these setups for people. I do a quick analysis. I go through here, a bunch of hand waving, and then I provide these strike prices. Now it makes sense. Somehow I've got to edit these videos. That's the only problem with live streams, right? But I don't want to record. That's ridiculous. They have to be live streams. So anyway, I provide these, and with Palo Alto in particular, there was this issue that we're going to talk about pretty soon here. So let me go back now. I even said before the live stream, I was like, don't forget to switch over to the browser. And then of course what happens. So anyway, here we go. Okay, so going back through this, there are these different strike prices. Sometimes there's 2, sometimes there's 4, sometimes there's, you know, more than that. And sometimes I do diagonal things and whatever. But it's this risk tolerance piece right here, this risk tolerance this risk tolerance part that changes the picture for everybody, right? Because as risk goes up and down, you know, the strike, that moves the strike, then it moves the expiration, it moves the sector that you're willing to look at, it changes all these things. And so there has to be some way to be able to adapt to that. And sometimes I mention that in the blueprint and sometimes I don't. So let's just move on, or I'm going to be here talking for the next hour and a half. I decided on some basics for the blueprint. I said, okay, I'm going to focus on puts. I'm not going to worry so much about calls. I do all of in the live trading chat, I mention all the calls that I write and stuff anyway, so I'm going to focus on puts for people. I'm going to focus 1 to 4 weeks out. And part of the reason I decided on 1 to 4 weeks out is so that I could actually track what's going on, right? Like these blueprints go out to a lot of people, and like part of the reason that they're real successful is that I take a bit lower of a risk tolerance when I look at those strikes, because I can't be putting out, of course, a bunch of stocks and have a whole bunch of people say, oh, well, every time I do this, I get assigned, right? So like the risk tolerance on the strikes in the blueprint have to be lower because of that. And then I look at 2 to 4 strike options, and I back this all up with specific technical analysis primarily. So, so 4, definition of a win. This is pretty basic. It's not totally, completely objective here, and you'll see why. Is what I mean is, so here's the idea. If I provide those put strikes that I mentioned above, if those strikes expire worthless, it's considered a win. If they expire in the money and they close on Friday after hours and they're just like, there's a assignment, but they're like just like a couple of pennies over, depending on what we were looking at, I'll either call it a win or I usually will call it a draw. But I kind of take those on a case by case basis. I don't really care. Like I'm not here to try to like make everything a win. Like I just want people to like learn and to make money and do all of these things. And so really the idea here is that the win is primarily based on that. Does it assign or does it expire worthless? So so here's the situation. Here's what happened for people that end up watching this later. Palo Alto was on the list. It closed on whatever day it was, like June 24th or something like that. Closed Friday at 3:04:20, and on Monday morning it hit. Now it rose up a little bit past this actually, but within the first, I think it was in the first 30 minutes, it was up almost $20 full to 323. And so then the question came in like, well, what am I supposed to do with this strike? Like, I mean, the strike, let's see. The strike, I can look at it really quick here. The 2 strikes were 280 and 282.50. So when we consider 280 and 282.50, and those strikes, by the way, were for 1 week puts, and they were for like basically 0.3% weekly gain on those premiums. And so looking at that, it's kind of like, well, okay, this stock jumped up 10%. That's going to really like reduce, like those strike prices are like meaningless, right? And so that was what happened. And so the idea now is, how do we address that? All this, what have we been on? 15 minutes, and finally I'm talking about how to address it. So anyway, so here's what happens. Sometimes in there I say, if provided that this stock doesn't drop below some value, right? And so that would be an invalidation, right? And in some cases, if the stock jumps up a certain amount, then that might be considered an invalidation too. And the fact is, the simple fact is like, that's just part of trading. Sometimes, we miss stuff. I was looking at doing writing additional puts on Bloom Energy this afternoon, and I totally missed. I walked away from the computer for like 10 minutes. I came back. I missed my opportunity, right? So like this just happens. It's just part of the game, and we don't want to force the trades. The biggest point of the blueprint, and you see in the blueprint, it's like, you see this thing and it's like in black and white, it's right there, it's clear as can be. And so it's very easy, right, psychologically for the brain to just click into that trade and just run with it, right? And so this is the human condition, right? So like we can't ever force the trade, right? If it's invalidated, if it's too high, if it's too low, and granted, too high, I always draw the line on whether it's too low, and that invalidates it. I don't ever draw the line on too high. And so these are some ideas that I'm kind of bouncing around about adding to the blueprint, is right, adding an invalidation on the high side as well. And so that's the thing, is we don't want to chase it. If it disappears, it disappears. And it's very easy psychologically to come in and be like, well, I missed the trade. Like, oh, you want it so bad that FOMO kicks in, and we can't. We have to like exercise that emotional restraint, that caution, say, hey, look, that's how the card, you can't expect to get a royal flush, right, every time. And so we have to take that, those trades and be, really robotic and objective about it. So that's one piece, is the invalidation. But let's say it's not invalidated, like price goes up and down, and price is never going to be exactly the same on Monday at any point as it was on Friday, right? Like it might pass through that, but it's just never the same. So if the price goes up or if the price goes down by, there's two ways to do this. You can either do it by strike level or by percentage, right? And so if we have, say, a $100 stock and we say we're going to write puts at $90 or $95, if the stock goes up by $1, then you can either say, well, the stock went up by 1%, right? And so you can say, well, I can make a, kind of like a barrier. And I say, if it goes up by a certain number of percent, then I will raise the strike price, right? Or you can raise the strike price linearly. You can just say, okay, for every dollar the stock goes up, I'm going to raise the strike price $1. Same on the downside. For every dollar the stock drops, I'm going to lower the strike price by $1. You can also do this by delta, right? And so if you have a 20 delta put at $100, right? Doesn't actually matter that's $100, right? And it drops to $98. You can go in and you can select the delta that matches what the old trade was. Now, I don't always put deltas into the blueprint, and it takes me very little time to do that. So like that's another idea that I had been kicking around, is I'll put the deltas in there. You can trade by delta, or you can literally trade that linear by either by percentage or by dollar. And so then there's these other pieces, right? More complicated strategies. When you're using the blueprint, my personal philosophy is I don't want to do a complicated trade if I don't have to. I get lots of trades that become very complicated. I'll start with a put. If I acquire something, then I have calls, and sometimes I put puts on top of it, and sometimes they're straddles and strangles and gut spreads, and I have all these different things like flying around, and that's where it becomes really difficult to manage, right? Like you talk to somebody about who is trying to learn how to like write condors, which have all of these 4 legs on either side, and it's like it just becomes like just managing one condor can be unwieldy in a certain type of market. And so I try to stay away from that. I try to keep things super clean. And so if you want to add strategies to that, well, that's my philosophy, right? Is to keep it simple. But I also don't expect everybody wants to trade the way I do, right? Like I say this all the time to people. Like I don't expect you to take my risk level, whether it's too low or too high, or my expirations or anything. Like everybody's got to have their own strategy, and I just want to help people find that and perfect it. And so you can add strategies to this, right? And a lot of people reach out to me about this, but the put is just the hub that all this stuff can go around, right? And so you can take that put and you can add a call to it, or you can turn it into a put spread, and you can buy a put on the above it or below it, right? So you can do those things, and the put is just there as kind of this starting point. If your risk level is high, then you take the strike prices that I mentioned in there, just push them up a little bit towards at the money. And if your risk level is lower, then just push them down, just drop them down so that they're a little farther out of the money, right? And then you can write everything about that, right? Everything around that idea. But the put should be that hub right in the middle, right? So you can add strategies to that. You just have to put in a little bit of extra legwork. And then there's all of these other things that you can use to modify the strike prices that I put into the blueprint, right? So you have your risk level, which we've talked about, the timeline. I'm primarily on lower timelines because and now this changes depending on how far you are in or out of the money, but if you're like somewhat close to at the money, then the highest weekly gain is like somewhere between 1 to 3 weeks, usually like 2 weeks, 1 to 2 weeks really, and 3 weeks in some cases, right? The farther you go away, if you're like way, 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 way out of the money and there's not a lot of intrinsic value, then okay, so in that case, you might see a higher weekly gain if you go months out. But I like to write lower or a closer expiration because the weekly gain is higher, not the total gain, but the weekly gain. And so you've also can modify in strategy, you can modify in sector. And when I say sector, what I mean is some people don't like to trade tech stocks heavy because they tend to be more volatile, they tend to be riskier. And so the idea there is that if there's something in the blueprint that is not a sector you like to trade, well, drop the strike price down a little bit. You can drop that strike price down. And so coming to the end of that list, the thing about this blueprint is that even though there's like super specific values like sitting right there on the page and all you have to do is like copy the trade first thing Monday morning, the real idea is that if your brain starts like kind of flowing here, kind of pumping through this and start thinking about it, you'll come up with your own kind of modifications. You'll get an idea of where I like to sit with risk and where the blueprint's risk tends to sit. And as you play with this, you'll come up with your own thing. Like you're sitting in front of the computer watching this, like you're trading options like you're a smart, capable individual, right? Like the people that do this are not generally morons, right? And so like you can feel free to figure all this out. Like you don't have to copy the trade exactly. So I hope that's helpful. I know I'm super good at rambling about it. But then when in doubt, just reach out. I have a lot of people that reach out about these. We can reformulate what these look like. I've started as per a suggestion, some feedback. I have started making comments on the blueprint if I see like major changes. I actually think I made a comment. I only made a comment on Monday this week. And so I won't generally make the comments, I think, if there's not like a lot of change. But if there's enough change that makes something, substantially impacted, I'm going to try to make comments like probably like Monday and or Tuesday and or Wednesday. And by Wednesday, unless it's a, 2 week or more expiration, probably that point, like theta's, taken enough off that it might not be worth trading that for, a 2-day expiration anyway. Like it's probably not worth the time and money, but I'm trying to do that. So, but of course, reach out, I'm always like helping people with these and trying to reformulate. And it's very quick for me to just rerun the analysis. So, and then lastly is for the people that really want the high resolution changes, the Signal Engine is doing all that. And right now the Signal Engine doesn't provide strike prices, but that's coming, right? And so the Signal Engine is evaluating things on every single candle, every 1 minute candle that comes through. It's doing the analysis on all of this stuff. And actually, it's not even just 1 minute candle. It's like anytime during the candle that any of this and any analysis, any of it trips, it'll throw a signal. So it's like real time during the course of the entire thing. And so eventually there's going to be strike prices available, and there's going to be a whole bunch of other features. So people that, and that kind of ties back to point one, as I mentioned with the blueprint, initially it was built for like essentials members that like didn't care about live trading and didn't care about all these other things. They just kind of wanted, they wanted a market analysis. They wanted to know what, a snapshot of what the last week looked like. They wanted, a few stocks that, like if you go look at like, I don't know, like Zacks ranks or something, right? Like they'll throw out once a week, they'll be like, these are the stocks you should look at. And that's kind of where the blueprint, where it came from initially. And we're like, we're modifying it and changing it and all that sort of stuff. So, so there's that. If anybody has any questions on that, I'm happy to answer them. Again, I hope that was helpful. I read through it. Sometimes I like listen to my stuff and I'm like, why did I even say anything? Like, none of this is like, seems anything useful at all. So hopefully that was useful. We have a few minutes left. I wanted to look at Micron. So we're going to go look at Micron really quick here. And the reason why is, and Megalo, I think that we were talking about this earlier, right? Is that Micron is, has, and of course, let's see here in TradingView, we've got the 1 year price target of Micron is 15.75. And if we look at, price to earnings ratio and stuff, like it's pretty, it's not that bad. The PE ratio is not crazy on it. But, we see here technical and analysts, both analyst rating strong buy, technicals as a buy. Looked like the, fundamentals are super strong, right? And so I wanted to just take a couple quick minutes and run through a couple of things here today. So Micron ended up going up today, 4.5%. That's pretty good. Would have been nice to have caught that yesterday. Would have made a nice little day trade. But I wanted to look here. So let's take a look at our standard kind of time frames. So Ichimoku, 1 hour Ichimoku. We're kind of at a neutral point here. If we look at Ichimoku, let's get rid of the linear regression really quick. If we look at linear Ichimoku before today, like this is today right here, right? This is this candle right here. If we look at Ichimoku before today, it was still at a buy. See the blue, this conversion line is below the red. It was still at like a sell. We're still like in sell mode. We've got this cloud, expanding cloud up until, if we take off these last couple of candles, up until today, it was an expanding cloud. Like this doesn't look good. Like 1 hour does not look good on the Ichimoku. Linear regression is negative. Let's see what the Bayesian model says. Bayesian model says right now it's saying higher chance of going up, but there's no telling what that might have said yesterday. Let's go to the day. Day Ichimoku looks pretty good. As you can see today, this candle it did start high and it dropped down. What looks like about $5 during the course there. But you can see in here, if I zoom in a whole bunch, you can see that actually the blue after today has now crossed down below the red. So let me remove the linear regression so you can see it a little more clearly. Blue is now crossed down below the red. That would be technically a sign that if we were day trading this, for example, okay, good time to sell this stock, right? We may have bought it back here when we see the red and the blue come up from the cloud. The green is above the cloud. We have expanding this region. Let's see if I can find my little circles. You guys know I love the little circles, right? So if this right here in a day trading environment, this is exactly where we would be going in, right here. We're looking at this thing. We're looking at it riding. We're riding that 5-day on top of the 5-day all the way on up. We're a little bit overbought. But this is kind of this point right here. Maybe that circle moves in a little bit earlier, or maybe after RSI drops back down below 70, we buy on this little retracement right here. Let's make the circle a little bit smaller. Right on this guy. right there. That's a really nice little one. It's kind of like kind of a doji. It's not a great doji, but it's kind of a doji right there. Right, a nice inverted, a nice like little kind of upside down cross doji. So anyway, you buy here, right? The signal looks great on Ichimoku. Today is exactly the day where we would sell. Even though it was up so much today, based on the analysis here, like we would actually have sold today rather than expecting another rise. I don't know, maybe we'll see more rise. If we go to the 4 hour, it's kind of the, we're actually not looking great here either. Linear regression's positive. What was it on the day? Okay, it's positive on the day. Right here, we're looking, this doesn't look phenomenal. And in order for this to improve, by tomorrow, this is going to have to be coming back up. Like we're going to have to be higher tomorrow than we were today. We have to beat today's high in order for this situation, this analytical situation just with Ichimoku Cloud to improve. And if we don't, we're also seeing we're dropping out of this 2 sigma band on the linear regression. And that's going to increase the variance on this thing, and it's going to be more of a sign that, hey, the market doesn't actually really know what's going on. So if we step back now and we look at the moving average battery, we've still got, this is kind of good news right here, right? This is pretty good news, is that we didn't actually test this 50-day moving average, but we got really close and we came up from it. So, I mean, who knows what happens here? I don't know, but this test is going to be really important, which I think yesterday was at 888 maybe, and now it's at 889. So it's still coming up. So and of course the linear regression here on the 1 hour is, going down. So potentially, I guess, potentially this this stock price, let's see if I can draw a beautiful line here. Look at how beautiful this line is. That's a beautiful line. Okay, so if this stock price keeps dropping, and in fact, let's try to get a decent line here. It's not entirely different than, let's go for these guys. We'll draw our own little channel and see if anything, no, nothing really fits there on that channel. There's not a lot in this little way. So if we follow the linear regression line, we hit, and these guys intersect at about 9:14 on Wednesday of next week, right? So we should be testing this thing. If the stock kind of continues on this linear regression channel, we should be testing the moving average next week at some point. So if it were me, I would be a little reticent to be trading this before we really test that moving average. Because if we bounce off the moving average, then I think probably we're golden. People aren't as, bent out of shape about the Iran war, even though everybody's bombing each other again. I guess the market's just decided that they have an appetite for war and they don't really care. So I don't know. I guess that's not really affecting stuff. So we'll see what happens. But if we drop this moving average, now granted, we've talked about this, there are literally as many support levels in between the 50 and the 100-day as there are price values, right? But some of them are far more significant than others. I don't know if there's any exponential ones or anything in here. Yeah, they're all above. So this is going to be real important. If we drop this, we might find that we're dropping back down towards the 100-day. RSI, lastly, RSI looks good. We're at a very median level RSI. We don't have any kind of crazy volume right here. If we look at the RSI on a daily, oh man, look at that, line's off now. Okay, there we go. If we look at RSI on daily, we can see how we came way into overbought territory back here, but we're not right now. Things are very, reasonable, right in the middle. And so if this stock can rise at a reasonable enough pace, with a reasonable enough pressure that this RSI doesn't just go bonkers through the roof, that would be, that would be like a phenomenal thing there. So I don't know. That's just a few thoughts about Micron. I still think that, some of this doesn't have anything to do with technical analytics, right? Like some of it is just like people wanting to rush in and buy stuff. It's like psychological, but from the technical perspective, I think we have to wait at least for a couple few days on Micron to see what happens there. At least that's what I would do. I tend to be a little bit too risky on some areas and maybe not risky enough on other areas, and maybe waiting and holding here is an area where I don't take enough risk, because man, it would have been great to get it pop in this when it was back at like $500 a share, right? Jeez. Okay. Anyway, I think that's all I've got today. Like I said, I hope that was helpful. I know I like just ramble and stuff, and maybe that's a good thing because I can, get more time, like watch minutes or hours on YouTube or what. I don't know any of that stuff. But anyway, if you guys have any questions, if you have any questions watching this, comment on the video. If you're a member, just come and talk to me in the chat. Hopefully it was useful, and hopefully we'll get another live stream up here in, I don't know, a couple weeks and have a good fun topic and everything. So hope everybody's doing well with the trading, and have